Don't miss out on the crucial financial updates in today's market. Expert insights from Rory Johnston and Professor Steve Hanke reveal potential shifts in oil prices and the enduring strength of the US dollar. Discover how the upcoming U.S. presidential election could shake the global supply of oil and debunking of petrodollar myths. Tune in for key predictions and strategies to navigate these turbulent times. Today, on Financial News in Review, we will summarize the following videos. From Kitco News, we have Election Outcomes and Oil, Trump versus Biden's Impact on Global Supply, Rory Johnston. From David Lynn, we have Global Collapse as Petrodollar Ends, Steve Hanke Debunks Fake News, Fairytales. From Oxbow Advisors, we have Chance Finucane, Oxbow Advisors Market Update, June 27th, 2024. Hello everyone, welcome back to Kitco News. I'm Jerry Safford, and today we have a critical discussion lined up on the ever-fluctuating and highly relevant oil market. We're delving into the various factors affecting crude oil prices and what we can expect in the near future. The core thesis of this discussion focuses on the precarious balance of the global oil market, driven by fluctuating supply and demand dynamics, geopolitical tensions, and strategic decisions by OPEC. Johnston details how this balance could shift depending on production policies and external political factors, particularly highlighting the potential impact of the upcoming U.S. presidential election on oil prices and global supply strategies. Here are the key points discussed by Rory Johnston, founder of Commodity Context, a newsletter known for its insightful and comprehensive coverage of the oil and gas sector. Current state of oil prices and market tightness. WTI crude futures are holding above $81 per barrel, a significant rise from earlier in the year. This price resilience is despite rising U.S. oil inventories and geopolitical uncertainties in regions like Russia and the Middle East. Johnston explains the concept of backwardation in oil futures as an indicator of market tightness. Influence of OPEC and production cuts. OPEC's role in market stabilization through coordinated production cuts to maintain price levels. OPEC, especially Saudi Arabia, faces challenges in balancing high oil prices with market share retention. Significant production cuts are being upheld despite anticipated global demand growth of 1.1 million barrels per day. Impact of non-OPEC supply increases. Countries like the U.S., Brazil, and Canada have been significantly boosting production. U.S. shale and offshore production from regions like Guyana and Brazil add to market supply, which complicates OPEC's efforts. Rory Johnston, founder of Commodity Context, a newsletter known for its insightful and comprehensive coverage of the oil and gas sector, made the following predictions. U.S. presidential elections' impact on oil market. Johnston predicts that a Trump victory could lead to stricter sanctions on Iran, reducing its oil exports and tightening global supply. Potential reinforcement of Iran's sanctions could remove 700,000 to 800,000 barrels a day from the market. Future supply and demand dynamics. Johnston highlights divergent forecasts. OPEC expects stronger demand growth compared to more conservative predictions from the IEA and EIA. This divergence creates uncertainty in market investments and future price stability. Rory Johnston concludes that the oil market remains highly volatile and dependent on geopolitical developments and strategic decisions by key players like OPEC. He advises stakeholders to stay informed and adaptable as upcoming events, such as the U.S. presidential election, could significantly impact market conditions. Overall, Johnston emphasizes a cautious approach given the unpredictable interplay between supply increases, geopolitical tensions, and market management strategies. Welcome back to the David Lynn channel, where we delve into the latest economic trends and financial insights. Today, we're privileged to have Professor Steve Hanke, a renowned professor of applied economics at Johns Hopkins University. In this episode, Professor Hanke addresses viewer questions and debunks pervasive myths around the petrodollar and U.S. economic policies. The central thesis of this interview is Professor Hanke's debunking of the so-called collapse of the petrodollar. He explains that there never was an official petrodollar deal, instead emphasizing that the U.S. dollar remains resilient and dominant as the world's primary reserve currency, contrary to the doom and gloom scenarios circulating in media and among certain geopolitical commentators. Here are the key points discussed by Professor Steve Hanke, Debunking the Petrodollar myth. Hanke emphasizes that the Petrodollar agreement never existed. What existed was a U.S.-Saudi Joint Commission for Economic Cooperation post-1973 OPEC oil embargo. He debunks the narrative that the U.S. dollar is weakening or being replaced, citing strong central bank reserves and consistent dollar invoicing in international markets. Current strength of the U.S. Despite geopolitical tensions and critiques, the U.S. dollar is stronger than ever, with central banks globally increasing their dollar reserves. Currency transactions reveal that over 90% involve the U.S. dollar on one side, reinforcing its dominant status. The Saudi angle. Hanke clarifies that Saudi oil sales in non-dollar currencies have minimal impact on the dollar's reserve status due to the rial being pegged to the dollar and Saudi's financial assets being dollar-focused. Domestic policies and economic effects. Hanke criticizes California's high minimum wage laws and social programs, arguing they lead to unintended economic consequences like job losses. He questions the rationale behind a universal basic income, UBI, funded by a carbon tax, labeling it as fairytale economics. Professor Steve Hanke made the following predictions. Continued U.S. dollar dominance. Hanke forecasts that the U.S. dollar will remain strong and continue to be the world's primary reserve currency. He expects the trend of central banks stockpiling dollars to persist, bolstered by economic policies and existing financial structures. Economic recession. Hanke predicts a recession later this year due to tightened fiscal policies and external economic pressures. Despite a potential recession, he argues that the U.S. dollar will remain the best dirty shirt in town compared to other global currencies. Professor Hanke concludes by emphasizing the enduring strength and resilience of the U.S. dollar in the global economy. He discredits the notion of the petrodollar's end as sensationalist misinformation and advises caution in adopting extreme economic policies. Hanke underscores the importance of factual understanding over media-driven fear and encourages viewers to critically assess economic narratives. Welcome to Oxbow Advisors' latest market update. In today's video, Finucane, the Chief Investment Officer at Oxbow Advisors, delves into the current economic landscape, focusing on the technology sector, stock market valuations, and strategic investment opportunities as we head into the second half of 2024. The central thesis of Finucane's presentation revolves around the overvaluation of AI-linked and semiconductor stocks, indicating a more prudent and targeted approach toward tech investments. He emphasizes that while these stocks have shown remarkable growth, their current valuations suggest limited upside potential and heightened risk. Finucane argues for diversification and cautious optimism, considering lower expected returns from the major stock indices in the coming years. Here are the key points discussed by Finucane. Overvaluation of AI and semiconductor stocks. Stocks related to the artificial intelligence trend have quadrupled in value in less than 2 years, with a price-to-sales ratio of 18 times. Semiconductor stocks have appreciated by over 50% in 2024, driving the performance in the tech sector. Tech sector analysis. The tech sector has a price-to-earnings ratio greater than 30 times, higher than in 2021, before a 33% decline. Within tech, semiconductor companies are now significantly more expensive and less attractive than software, hardware, and IT services. Investment strategy. Focus on companies with better-than-average valuation, low capital expenditure needs, and stable earnings quality. Emphasis on targeted buys in sectors like healthcare, utilities, and online travel agencies. Stock market valuation. The S&P 500's price-to-earnings ratio is above 21 times, similar to past market peaks. The valuation disparity between the S&P 500 and its equal-weighted counterpart suggests potential future market corrections. Diversification for future returns. Due to the significant past performance of large-cap growth stocks, diversification across various styles is recommended for better future returns. Vanguard's 10-year projection for stocks is modest, suggesting balanced and flexible investment approaches. Finucane made the following predictions. Lower expected returns for major indices. The high overall valuation of the S&P 500 and other indices suggests that future returns will rely more on earnings growth rather than multiple expansions. Potential market corrections. The significant valuation gap between the S&P 500 and its equal-weighted version indicates potential for the major index valuations to fall in line with historical trends. Chance Finucane concludes by reiterating the need for cautious and targeted investments in the tech sector, considering the overvaluation in AI and semiconductor stocks. He advocates for a diversified portfolio across various stock styles and asset classes to navigate potential market corrections and achieve balanced risk-adjusted returns. For staying updated and accessing more investment insights, viewers are encouraged to subscribe to the Oxbow Advisors YouTube channel. Rory Johnston and Professor Steve Hanke provide valuable insights into the complex dynamics of oil markets and the U.S. dollar. Johnston's in-depth analysis highlights the potential impacts of the U.S. presidential election on global oil supply, while Hanke debunks widespread myths about the petrodollar and reaffirms the U.S. dollar's dominance. Both experts agree on the volatility of markets influenced by geopolitical events, but they diverge on immediate economic policies and their impacts. Tune in for more expert predictions and strategies to stay informed. Thanks for watching Financial News and Review for June 28th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see, drop a comment below. See you next time.